Tom Lee just came out and released an incredibly bullish view on Tesla in the medium to long term here, along with another deep insight into his macro view of the broad market and the economy, which is incredibly important, especially coming after the FOMC meeting that we had yesterday. This all has to do with, again, declining growth expectations, unemployment rising, and the risk of inflation coming back, which you can debate that all day long, but the main thing that Tom Lee is focused in on here is his contrarian view on the April 2nd trade deadline that we have all been looking at over the last couple of weeks here. Now, again, in this video, we're obviously going to be talking about the macro view and all of these different parts of this nuanced situation that Tesla is dealing with in the present. But if you guys watch until the end of the video, which I hope you do, I'm going to outline every single thing that you guys need to see on the charts of Tesla in order to feel a lot more comfortable in deploying more capital. Like, where on the chart should we be looking in order to start maybe considering some more purchases? Now, I will tell you guys, last year when I called this out, this short-term trade setup did end up yielding about an 8,000% return with options. So that is a part of the video you absolutely do not want to miss. So before we get into all of that information, guys, if you guys do enjoy these videos here, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading these videos out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed and turn on notifications so you never miss these videos when they are posted live. But without further ado, let's play Tom Lee's macro clip here, and then we'll get into everything that we need to talk about with Tesla.
In fact, it's the fifth fastest decline for the S&P since 1950. In other words, in the last 75 years, there are only a handful of instances where markets have fallen this quickly. And I just want to show you what happened to markets in those previous instances. The fastest ever decline for 10% was during COVID. Those were these initial days. The second fastest was Trump's first term when the trade war broke out. The third was in 1955 when Eisenhower had a heart attack. The fourth was 1950 with the Korean War. The fifth was the Volcker shock, which was during the inflation crisis. And the sixth was the Asian financial crisis of 1997. So this is a similar shock. In each of those cases, markets ended up doing something what I call rage selling, which is a panic sale. But look at what markets did in the subsequent month, in the following month. Of those instances, only COVID saw further selling in markets. And the median return was 6% gain. 3 months later, 6 of 6 times the market was higher with a median gain of 9%. Over the next 6 months, the median gain was 15% and 6 of 6 saw higher gains. And then look at 12 months later, 6 of 6 were higher 12 months later with a median gain of 21%. So as much as you may think you don't want to own stocks until April 2nd, which is when the tariff deadline was set by the president, okay, I think there's a lot of reasons why we could be turning sooner. For instance, there was a tweet this morning, March 19th, where White House economic advisor Kevin Hassett said he spent the entire night with Commerce Secretary Lutnick and Treasury Secretary Bessent negotiating with other countries about mutually lowering tariffs ahead of the April 2nd deadline.
So as you guys heard in that clip, Tom Lee is maintaining his bullish stance on the overall market. And again, he is kind of using past performance in order to kind of generate a prediction for future results there. But again, he's had a pretty good track record in the past. Let's see if he's going to be right on these dips that might deserve to be bought here. And again, thinking about that tariff war, the trade deadline, it does look like Donald Trump is using this threat of tariffs and implementing these tariffs to try and get a deal done. But again, we're not going to get political in this video here. All we want to really talk about next is the situation with Tesla here. So the first thing, again, that we need to start talking about here is sentiment. The sentiment surrounding Tesla right now from the broad market, if you think about Tesla as the company itself, I think the sentiment is relatively good. The overall sentiment in kind of half of the United States here around Elon Musk is very, very negative. There was this report right here that Tesla is done in Germany. 94% say they won't buy a Tesla car after some of the actions of Elon Musk over the last couple of months. Now, what I want you guys to realize is that you can justify or you can then kind of explain some of these actions here But it doesn't really matter if a lot of people are then going to have a sour taste in their mouth after seeing what has happened with Elon Musk and some of the actions that he's taken. It might be true, it might be not true, but it doesn't matter if the masses are going to be thinking one way, or a significant portion of the masses are going to be thinking in a certain way. Now, speaking on this sentiment point as well, we also have a written report here from Dan Ives. Musk needs to do these two moves to change the narrative. It starts with Doge. Tesla and Musk are facing a defining chapter in their future, and how Musk handles the next few months will be pivotal to the long-term growth trajectory of Tesla in our view. Tesla is Musk and Musk is Tesla. They are synonymous and attached together and cannot be separated. For the last 15 years, Musk has guided Tesla through many challenges to build the company into the global brand it has become today. We have been there for the ride with many ups and downs and defended the stock again and again over the years, as we have firmly believed Tesla is the best disruptive technology player in the world. Now, even a longtime Tesla bull can see the writing on the wall here and the sentiment in the broad marketplace kind of shifting around Tesla, and he has two main suggestions on how to stop this from continuing or from snowballing even further. Formally announced, Musk is going to balance Doge and being Tesla's CEO. Musk needs to make a statement, and his actions speak louder than words. We would expect this to happen either before or during the first quarter earnings conference call in early May. Investors need to see Musk take a step back and balance his Doge and Tesla CEO roles. If he does this, the heat from Musk around Doge will start to dissipate among most of the critics, and this will leave a scar for Tesla, but not permanent brand damage. 2, give the roadmap and timing for the new lower cost vehicles to be released in the market in 2025, along with the unsupervised FSD rollout in Austin in June. With a Model Y refresh, inventory issues, and a host of demand issues with Musk's brand damage a worry, there is one person Tesla investors need to hear from, and that is Musk. Now, some of you, maybe you're not paying attention too well. You haven't necessarily seen kind of the broad effects of this overall sentiment shift around Tesla and Elon Musk. And I'm going to play a few clips right here to just kind of get that across. People on the left right now are absolutely hating Elon Musk right now. One of these clips comes from Tim Walz, the former candidate for vice president, where he effectively says that if he wants to feel better about himself during the day, he looks and pulls up Tesla's share price. Let's roll the clip.
Saying on my phone, I don't know, some of you know this on the iPhone, they've got that little stock app. I added Tesla to it to give me a little boost during the day. 225 and dropping.
And then you have a clip from Jimmy Kimmel's late night show where he's effectively telling his audience to stop vandalizing Teslas, but it does seem a little bit sarcastic. Let's roll that clip and then let's continue.
Tesla stock is way down, almost disastrously so. People have been vandalizing Tesla vehicles, new Tesla vehicles. Please don't vandalize. Don't ever vandalize Tesla vehicles. And so
there is a lot of negative sentiment surrounding Elon Musk right now, and Tesla is obviously a negative beneficiary of what's happening with Elon Musk's image within some groups in America and around the world. But getting back to some of Tom Lee's statements here, some of the things that he points out is that Tesla has strong brand and customer loyalty. Tesla's brand, synonymous with innovation and sustainability, has built a loyal customer base. Now, in addition to this, he also looks at demographic data and who is actually the individuals and what is the demographic makeup of the customers of Tesla. Now, in early 2019 to 2022, you did see about 38% of Tesla buyers identifying as Democrats compared to 30% identifying as Republicans. That would suggest that Democrats were a larger share of the customer base than Republicans at the time, but that has since changed. By 2024, the average Tesla buyer was more likely to be a Republican than a Democrat, according to NPR. This wasn't due to a surge in Republican purchases, but rather Democrats fleeing the brand. So, if you think about this overall sentiment shift right now around Elon Musk, he has a couple of things that he really needs to accomplish. And when you think about the situation with Tesla and Elon right now, I know a lot of people think that the cancel culture element of our society right now is kind of coming to an end. But as you can see through a lot of the different actions and performance of Tesla's share price this year, again, the broad market has been down, but Tesla has drawn down very, very, very significantly. But what Tom Lee also points out is a couple of other things that should keep Tesla afloat, especially when he thinks a lot of this short-term political volatility is going to blow over. So they're a leader in FSD, full self-driving, robotics, and AI. Tesla's full self-driving is far ahead of other EV makers. Robo-taxis near launch. We'll see about that. Optimus humanoid robot close to production. High-quality employees and innovative culture. Tesla attracts top talent through its mission to accelerate sustainable energy, competitive pay, and growth opportunities. Now, we will see if this political turbulence and volatility that we are seeing with Elon Musk continues, and maybe some of that talent doesn't necessarily want to go work at a company that Elon Musk owns, but that is yet to be determined. Now, again, we also have superior battery technology and supply chain. Tesla's gigafactories enable large-scale battery production, reducing costs and improving performance. The last one on the list here, scale manufacturing lead and extensive supercharger network. Tesla's supercharger network with over 45,000 stations globally is a key differentiator addressing EV charging barriers. So all of these different elements of Tesla's business is why Tom Lee is looking at this short-term volatility and drawdown in Tesla's share price as a massive buying opportunity. Now, hopefully you made it to this point in the video, because I think this is probably going to be the most valuable part, because this is where a lot of you guys can make more money than a lot of people that haven't seen this video here. So what I want to do with you guys is pull up the chart of Tesla. Again, this has had a very, very, very significant drawdown from the highs here from 488 all the way down to where it's currently trading at about 233, a 52% drawdown from the highs. But again, as Tesla shareholders, I don't think that anybody hasn't really gotten used to these significant drawdowns in price volatility in Tesla at this point, especially if you've been holding this company for a significant period of time. Now, if you guys have been paying attention closely to some of the things that I have been talking about, I like to buy bases. When you can understand when a stock is basing, forming a bottom, it gives you a stronger and more solid risk to reward entry for either a short to midterm trade or ads for your long-term portfolio. So let's briefly cover kind of everything about the last time that I highlighted Tesla to everybody, and why I am calling for 2025 to be a year where we have yet another absolutely epic Tesla either trade or a really good opportunity for Tesla to give you guys some opportunities to add to either your long-term positions or a midterm position trade here. So with what we're seeing with Tesla right now, it is possible that we are forming a little bit of a base, but we really need to see a lot more consolidation at these lows and start to curl back above this daily 10 exponential moving average. But when we go back to this area right here, what did we see? Tesla was significantly drawing to the downside, shifts back up, forms a really nice period of consolidation, comes back above that daily 10 exponential moving average that we were talking about just now, which is what we want to see with this base, formed a great period of consolidation, tightened up, and broke out to the upside. This is basically how I short-term trade all the time. Stock moves up, stock starts to move flat, consolidating above that daily 10 exponential moving average. It breaks to the upside. You're able to enter long. Now, obviously, there's some sector analysis. We're going to be looking at the big picture to understand which sectors we want to be in, but that's kind of the gist of it there. If we can see Tesla starting to base in this nature right here and start to consolidate above the daily 10 exponential moving average like we saw in here, there will be another really awesome trade setup potentially forming on Tesla here. Now, what I want you guys to also think about is that this move to the downside that we have seen. So again, I actually do think that there could be some downside down to these lower levels in here, kind of right around 200, 195. But that would provide, again, an even greater opportunity because there's still going to be people taking short positions on this name, continuing to push it lower. And eventually, when they close those positions, in order to close a short, you have to buy. So it adds buying pressure back in when those shorts decide that they have gotten enough out of their Tesla long. So just kind of looking at this chart here, this is not a chart that I would want to buy right now. And I think this is a good lesson for a lot of you guys, that just because a stock that you like is down, it doesn't necessarily mean that you should be a buyer of it at those prices. Sometimes earnings change. Sometimes price is going to reflect that as well. And a stock's price can move lower, and it can actually get more expensive in terms of the valuation that it is trading at based on the fundamentals. Now, depending on what happens with Tesla's earnings coming up at the end of April here, that could be an opportunity. Again, like we heard earlier in this video here, that Elon could come out and kind of reassure his investor base that he's going to be coming back to Tesla and putting it as his main focus. And that could be a catalyst for this to start moving to the upside. But until then, this is one that you want to treat with a decent amount of caution. Wait for it to form that really solid base if it is going to, and then be able to execute then. I think in these times in the market, everybody, a lot of people rush. They say, okay, the market's down 10%. We have to do something. Just because the stocks are down, we have to buy them. Buy. But the problem is that you could have bought Tesla. Let's see here. We can go all the way back up to these highs. You could have bought it at a 10% drawdown right down in here. You could have bought it at a 15% drawdown, 22% drawdown, 30% drawdown. But again, you would be massively underwater on any of these new purchases that you made with Tesla because you're just buying the dip. In order to make sure that you're going to get that best risk to reward entry, you want to make sure that you're looking for that base, have a really, really solid understanding of when the stock is looking like it wants to bottom, and then you're able to take a better risk to reward entry. So guys, that is going to wrap up this video here with Tesla. I went on a little bit long, but hopefully you guys did enjoy this type of analysis in here. If you guys did, make sure you guys go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading these videos out to as many people who actually want to learn. And again, if you guys never want to miss another video like this, make sure you hit that subscribe button and turn on notifications so you're notified every single time these videos go live. But until next time, guys, I will see you. Peace.